Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Thursday, 25th day of June 2020, and this is the Daily Report for Gold and Silver. If not for dollar strength today, once again, we would have seen gold futures move higher. We had a fractional move in gold, and spot gold actually traded higher by a couple of dollars. As long as we have the pandemic in our headlights, I believe that we will see gold hold firmly in this area and move to higher ground. We'll talk about that as we pull up our technical studies, but first to the price board. A mixed bag in the precious metals, with gold futures trading fractionally lower on the day, down by $1.10 at $17.74, and spot gold actually trading higher on the day, up $2.84 at $17.6330. Silver had the nicest gains of the day, up almost a full 1.5%, just shy of $18 at $17.93, and platinum and palladium both closed lower, with fractional losses in platinum, $803.80 down 80 cents, and a $42 decline in palladium at $1,846.50. And that was all with dollar strength resulting in a gain of about 0.25%. 97.35.5 is the current print on the dollar index. Let's take a look at our technical studies. This first chart that we are looking at is a 480-minute standard candlestick chart of gold futures. What we see in this chart on the left-hand side is the former yearly record coming in at 1788. We can certainly see that that number was taken out this week, and taken out effectively, not only in terms of the highest intraday price, but more importantly, the highest closing price that we've seen in about 7.5 years. We're looking at different key areas of support and resistance, and obviously the main level of resistance stands at these record highs. They came in at 96.10, I believe, and then of course above that is going to be 1800. When we look at support areas, the primary support level that I'm looking at is 1775. That is based upon this top right in here. And the support level below that is at approximately 1760. And that is based upon these series of tops here. While I am still cautious in terms of my short-term outlook where gold prices are headed, there is no doubt I am extremely bullish about the interim and long-term prospects of where prices will head. We are looking at a daily chart. This, the continuous contract of gold futures. We have a 50 and 200-day moving average. We have our Elliott wave count along with a Fibonacci extension. First, the fact that the 50-day and 200-day moving averages continue to move farther and farther apart from each other is a very bullish statement. But what I find most interesting is a Fibonacci extension that we've done in conjunction with our Elliott wave count. If we are to assume that this long move between 1450 and the former record top at 1788 was the conclusion of a third wave, and then if we formulate that we had our basic correction taking us to 1665, and then calculate a 0.618% extension of this third wave, that tells us that we could see gold trade as high as $1,876 by the conclusion of the fifth wave. When we look at a Japanese average chart, and that's what we do have up on the screen, we can see that prior to today's activity, and that is this doji-like candle here, we had 3 concurrent days in which we had no lower wick and pretty decent body size. That is what propelled us up to this new record top. I would expect that to continue. The only real caveat to that is the fact that the quarter will end next week, and if money managers who have been hit hard in their equity portion of their portfolio pull profits on gold, we could see that market sustain some sort of a drawdown early next week. When we look at a weekly chart, what we can glean out of this data is that we are still showing a slight uptick in terms of the activity this week. That's why we're getting that small green candle. And the open as well as current pricing or close are above what I consider to be a major level of support at 1765. We did pull profits yesterday, roughly $1 to $2 from this area. The question is whether we want to wait to see how the market reacts after the quarter ends next week to reestablish a position, or if we feel that entering earlier is warranted. That's something we'll talk about tomorrow as well as Monday. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.